Good morning, everyone. Today we're going to discuss lengthening cycles, which is a very popular topic by Benjamin Cohen. But the actual impact of a longer cycle is something that is coming quite relevant at this point, given the fact that the actual parabolic advancement or parabolic movement of the 4 year cycle is not taking place. But are we actually seeing 4 year cycles, or are we already seeing lengthening cycles and we have not been taking it into account because we were expecting the previous cycle to be the same right now? That is something that I'm going to address today. But before we're going to continue, do not forget to subscribe to the YouTube channel beneath, like the update if you enjoy the content as well, and do not forget to check out the giveaway, because today and tomorrow we're going to give away some big prizes as it's weekend time. 24 days of giveaways. Link is in the description beneath, and also you can find a way how to join the giveaway there. Also, do not forget to check out my Twitter and Instagram. Daily content on both of those channels. I'm trying to post as much as I can, so definitely do not forget to follow me there. So when we're looking at the actual cycle right now, we've had a bear market from end of 2017 to the bottom in 2018, December 2018, as the crash in March 2020 wasn't a new low. So technically it wasn't higher low, but still it was some sort of crash and black swan taking place with Corona back in the day. And since then we are in a bull cycle. However, we are not seeing the exact same structure as what we would have been expecting, given the fact that we had that parabolic run in 2017. We've also seen such a parabolic run in the dot-com bubble. We've also seen such a parabolic run in 1929, which is a topic that I'm going to address way more on this YouTube channel. So where are we right now, especially given the fact that Plan B stock to flow model, one of his models was wrong, but that group of people were assuming that we were going to accelerate with the prices right now. And there is a group of people that believe in the actual impact of the 4 year cycle, and we're assuming that we were going to get the exact same as in December 2017, which we are not right now. And I've addressed earlier that at the moment of the breakout, that if we would have been going further upwards, I would have expected to see a bigger breakout taking place if we are truly going to accelerate. And we did not see that happen, so I said, okay, we could be getting some self-pressure because of the fact that we are not doing it, and then we get additional confirmation that the Plan B's model is wrong, so people make a decision with the positions that they have, or based on the fact that the 4 year cycle is not happening at this point, people might decide to adjust their investment thesis. So that's all happening right now. I think we are in a period of uncertainty. But if we're looking at the indicators, and if we're looking at the price action of Bitcoin in itself, or we look at on-chain analysis and combine it, I think that we are still in the middle of a bull cycle. The cycle will take longer, which means that we'll also be exceeding numbers that you will not be expecting to see happening in such a bull cycle. I still believe that we're not at the peak of the run. And when we're looking at the peak of such a run, I think you should be looking at the overall valuation of crypto in itself. Where are we right now? Well, the one to compare it to is the dot-com bubble. The dot-com bubble in 2000 started to accelerate already in 1969 and 1967. Earlier it had a crash. I guess it was 49 or 59, 94 or 95. But after that, it started to accelerate, and it happened for several years, and we have seen numbers that we were not expecting to see happening. So the valuation of the dot-com bubble was at that time between 10 to 12 trillion. If you use interest rate, you get close to 30 right now. Crypto is only 2.5. Bitcoin is only 1. And the actual implementations of crypto in the real world and the potential adoption that we're going to see on so many levels could be exceeding that number far heavily. So where are we going to top out with the entire cryptocurrency markets? I think we're going to see a top between 10 to 15 trillion. somewhere next year. That is very likely to see happening if we just copy paste .com bubble, but also in terms of the growth and the potential of the markets that we are living in. And I can't even name all the opportunities that are in the cryptocurrency markets for the entire world. So we are currently in a phase that is called the mid-bull cycle. We are seeing that layer 1s and some projects are already accelerating quite fast, which we've also been seeing with Ethereum in 2016. Ethereum broke out of a sideways accumulation pattern and started to accelerate quite fast. And then it started to look vertical when it sideways made another run. That is what we most likely could be seeing with projects that have been running already, is that they are going to consolidate and then have another run before they end off. But with projects that are not moving at all, they are still standing still. But with Bitcoin as well, we are in the middle of a bull cycle, which makes it confusing for people to realize where they are. People might say, hey, Bitcoin is overvalued or it's quite expensive right now. Where is it gonna go? Other people say it's still undervalued. It's a confusing period in which bulls and bears are not agreeing where we are at this stage. And I think the fact that Bitcoin's price is just consolidating here is just a sign that we're still in the middle of that bull cycle. So I'm assuming that we're going to peak out next year, and that's what we're going to discuss in the next corner with some macroeconomics, but also with some on-chain analysis and TA. Let's dive into that in the next chapter. So when we're looking at data, we've come to the thesis where we are saying, okay, we're going to see a lengthening cycle, and we are in a path where we are making higher lows, higher highs. So our core thesis is that we're going to see a longer bull cycle. Always, if you're a trader or investor and you are making assumptions, you should be open for other theses or other ideas or whatever there is. So there's always a bear case, there's always a bull case, but in the world where Corona is still a thing and we are still printing a ton of money and we're still seeing inflation with these low interest rates, we are good to go with Bitcoin as an inflation hedge. But there is a critical one that we should be discussing, and we're going to discuss that at a later point in time in this update. What we see on the screen is the total supply held by long-term holders. I've been covering this earlier in the newsletter, and this is also information that we share in the newsletter, so definitely check out that one too. It's only $15 a month and you get 12 updates per month. But there's tons of information on this chart alone. The first topic that I want to discuss is the fact that we are having multiple cycles already. Are we actually seeing a 4-year cycle? We have seen a peak run in 2011, right? Since then, we've had a peak run to the top of 2013, 2 years. After that, we've had a run from 2013 to 2017, 4 years. So we're actually not seeing a 4-year cycle at all. We have seen a 2-year cycle and a 4-year cycle. Most likely, and that's just a guess, is that we're also going to extend the previous cycle once again. 6 years, 8 years, 6 years would say 2023, 8 years would say 2025, which is called the supercycle. So we're still, the entire thesis of a 4-year cycle is not what we have been seeing, but everyone can make their own thesis or make their own idea. But what it shows here, that's more important, is that during the actual peak run, long-term holders are starting to sell off heavily. And the last runs, you can see the most out of that. What we are seeing here in 2017 is that long-term holders started to sell off heavily. The moment that this orange line starts to dip quite significantly, that is the moment where you should be starting to take patience. And most likely the moment that that starts to drop, you will see euphoria euphoria is going to take new runs. Fear and greed is going towards greed again. So this one is a key signal of potential bull cycle peak to be happening, in which if it starts to drop, long-term holders are selling their positions, and those are way smarter than the short-term holders, as usually the short-term holders are the ones buying in such a peak run. So this one starts to drop, and then the moment a bear market starts to happen, they are starting to buy back in once again, and we have seen it happening during the previous run too. Now, what do we see currently is that it is still consolidating. So Bitcoin's price is around all-time high. And in the previous rounds, we have already seen the long-term holders selling their positions. But right now, Bitcoin is consolidating. And the long-term holder supply being held by long-term holders is also consolidating. So we are not at a peak run because long-term holders are not selling. We are not in a bear market because they are also not buying. So we're in the middle. And that's what you also see reflecting in the price of Bitcoin right now. It's just stagnating, right? So this is a key one to keep your focus on. And then we also know, and this is in Dutch, but it's Google Trends, that you should be focused on the Google Trends overall, in which you can say, okay, Google Trends is where you find where Bitcoin is peaking and where we should be starting to focus on potentially selling our positions. This is the peak run in December 2017, which was absolutely retarded in terms of growth of social media channels too. This is the period that we've experienced previously in this year. And right now, what do we see? Yes, we see that Bitcoin is not euphoria and hype at the moment. The actual hype is in metaverse and NFTs, but Bitcoin in itself is not. So we are not at the top of a cycle, which means that we're still in the middle of a bull cycle too. So then we're looking at some more data in which we can see the market value to realized value. It's a ratio. It gives an indication of when the traded price is below a fair value. And the fair value is in the middle of this entire post. What is shown here is that the orange line is peaking heavily the moment that Bitcoin starts to accelerate quite fast. So peak numbers here, 2011, 2013, 2014, also peak numbers in 2017 and during May. Right now, we are just in between the bands. If it gets below 1 or gets at the lower bounds, it is obviously a best moment to buy Bitcoin at this point. Which we are also not seeing, and we're also not at euphoria stages. So once again, coming to a conclusion that we are in the middle of a bull cycle. So then finally, the crypto fear and greed index. If you would assume, I don't know why I've got all those ads here. If you would assume that we are at the euphoria right now, this one would have been at extreme greed, which was last month, around the all-time high of Bitcoin. But we are seeing that we are at fear at this point, through which the market is not showing too much strength. And that is also why altcoins have been seeing a certain sell-off taking place. Now, what should we be taking into account? Well, the fact that we are getting a longer cycle is because of the fact that the halving is going to have less impact on the prices and macroeconomics will have a bigger impact on the prices. One of the key indicators for that is the strength or the weakness of the dollar. If the dollar is showing weakness, Bitcoin is one of the best assets to actually have in your portfolio. If the dollar is going to be stronger, Bitcoin is one of the weakest assets to have in your portfolio. And that is why watching the dollar is a very important one to look at, especially if the interest yields are going to run up as well. What we see here, 2017, big run up of Bitcoin. That was during a year that the dollar itself was showing weakness. Also, the equity markets were showing strength during that period. And this is why Bitcoin started to accelerate, or at least one of the arguments why Bitcoin started to accelerate quite heavily. It wasn't really discussed back in the day. But what it shows as well is that during the corona pandemic, the dollar was weak once again, and the orange line, which is Bitcoin, started to accelerate once again. Since then, we've had an expansion of the dollar and a bounce from the dollar, causing a correction to take place. We've also taken this correction here, in which we saw a bounce of Bitcoin taking place. However, the dollar started to break back up, Bitcoin corrected. Since then, sideways action, resulting into Bitcoin running towards a new all-time high. After that, breakout of the dollar, Bitcoin correcting. Something to keep in mind, in which that if the dollar is not going to break through this level and reverse and has another year of sideways or downwards action, the Bitcoin can just continue running. But the overall cycle will probably be ending the moment that yields are going to run up and the moment that the dollar will be continuing to show strength. So that is something to keep in mind. If the dollar is going to reverse and show weakness, which is most likely going to happen very close or like somewhere in the coming months, if we reject at this level, Bitcoin will do well. But if the dollar will continue running upwards, you should be aware of the fact that Bitcoin is going to correct quite heavily and it's not the best asset to have. So that is something to keep in mind, and we're definitely going to focus on here. So when we're looking at Bitcoin overall, in which we can say, okay, this chart in itself might look like a chart that is about to have a heavy correction. It is because you're looking at a linear chart at this point. If you're looking at Bitcoin during this period itself, it would also say, I don't like it too much. If we're going towards Ethereum against USD, back in 2016, it is a very comparable chart to what some projects have been doing, like Phantom and Solana and such. They all look the same. What has happened with Ethereum after is just a sideways period and then another big expansion, which resulted in this massive run that we all know that took place. So vertical charts can be quite confusing, especially given the fact that it already has seen so many gains that we might be seeing a heavy correction taking place. But as Ethereum showed in 2016 and 2017, layer 1s can just continue running. So that's why they are not an argument for whether we are at the peak high of the bull cycle or not. When we're looking at Bitcoin against USD, or when we're looking at gold from back in the day, which is also a nice one to look at, is gold in itself has seen a big run as well. We've seen this expansion during the 70s and then another heavy run taking place in the 1980s, after which we had a pretty long correction taking place, which is comparable to the price action of Bitcoin in 2018. If you look at this chart for yourself, which is comparable to Bitcoin at this point, you would argue that the bull market is over. But we actually got another run taking place in the markets from that point, which is kind of reflective to where Bitcoin is at the moment, which is the same view. We've had a big run. People would be arguably saying, hey, we are at the end of the bull cycle given this big expansion, but as long as we hold critical levels, we're going to continue running. What are the levels to watch for Bitcoin? We could be easily seeing a run or drop towards any of these levels. The crucial one is 42k. The actual one that I'm looking at is the level around 48k that did not see any retest at all, and that region around 53 to 55. Where could we going with the next expansion of the bull cycle? Well, we could be going or accelerating through Fibonacci extension. Then we are seeing target points all the way from 109k to 307k. Then we get to the conclusion that if we are going to have an expansion with another bull cycle taking place, it is very normal to expect that we're getting that run towards 250 to 350k, because a standard 80% correction will land ourselves on the level of May 2021. So where are we? I think we're still in a bull cycle. I still believe that we're going to have 1 or 2 big alt seasons taking place in 2022. It will be a massive year, and you should prepare for that. If you have enjoyed this longer update about the markets, subscribe indeed, let it know in the comments, and have a wonderful weekend.